There you go. 50.
Hey everybody, welcome to Market Mavericks. Of course, I'm Gareth Soloway, joined by Mike McGlone and Scott Melker right here on, again, Market Mavericks. And it is a big day in the stock market. Stock market is collapsing. S&P right now, folks, we are looking down 1.7%. In fact, I'll throw up the chart here so we can take a look. This is your S&P weekly chart. And I'm going to start with this, and then we're going to get into some of the causes of the market. But I'm a technical guy, as you guys know, and I've shown this to you guys in the past. But look at this. This is a parallel that goes back to the 2020 lows of COVID. And look at how this line here matches these lows, even the liberation sell-off low, right to the bull market high. And lo and behold, look at what's happening right there. All right. So that was number one. And I'm going to just hijack this for one more second. This is another awesome chart that I had to show you guys. This is your weekly SMH. So we're talking the semiconductors, which obviously have led the market. And in 2021, the SMH, the semis, got 102% above their 200 weekly moving average and then fell back 45%. In 2024, exactly 102% above their weekly 200 moving average, dropped 40%. And lo and behold, 3 weeks ago, we just got 102% above the weekly 200 moving average. And now we're starting to come in. So listen, I mean, overall, to me, these are things that I can't help but, basically think that there's something going on here that's big. What are you guys' thoughts on the market? I mean, give me some thoughts, Scott and Mike.
You first, Scott.
I think that the government shutdown now being resolved was somewhat priced in. So people are looking to the next narrative, and they're concerned now that we might not get October job data, which means that the Fed now is 50-50 on the chance to cut. And we know that if the Fed doesn't cut, then it's all over, bear market, depression, and we're dead. So I think right now this is one of those times when there's a ton of uncertainty in markets. But even more importantly, we're coming towards the end of the year, and it's a great time to take profit for people who have basically been in a nonstop stock bull market since April.
We're just seeing
some selling
in the crypto markets. I've seen a lot of kind of people frustrated, right? I mean, here you said the market hitting all-time highs. Are you sensing that frustration between alts and Bitcoin?
Absolute misery. Fear and greed is below where it was even when we retraced to 74K, in the tariff panic. Definitely, I would say, abysmal sentiment in the crypto market, and Bitcoin's even well down. So it's not a surprise at all. Looking back at 2025, kind of had this idea that we'd been in this nonstop bull market. But as I kind of dug into with Rand Nooner last week, as I look at it, well, we were already above 100 in December of last year. Right, Mike? It was December 6th, 7th, somewhere around there. Yeah. We're below that now. So, yeah, we've had some great volatility, up 26, down 26,000 from there, literally, down to 74 and up to 126. We're the same price, and altcoins are much lower. So you could argue that we've either been in a very choppy or actually sort of a quiet bear market in crypto for the last year, and it's getting worse. So not much to be excited about.
So Mike, talk to me, man. A few weeks ago we had this, and you said sell everything. That's virtually when the top was put in the S&P here.
That was October 9th, I think, and October 10th was the huge leverage event or something, right? Something like that.
So tell us, like, are you how much downside? Is this the beginning of something bigger? Are we going to move back up? What are your thoughts?
Yeah, so that day was kind of more of a luck thing. I was really starting to feel it. Yeah, I want to show a few charts. To me, this is the big one, and I am absolutely frightened about what the implications are to some normal reversion. So I just want to start out with show you a few charts and see what's happening. Now, first, I'll put it into context. We all know what happened with the shutdown and then the election. The election was significant, complete Democratic sweep, and it pointed out the number one issue is they, quote, use the word affordability, it means inflation. Trump's trying to pump up the stock market, which means inflation. It's an end game. So I'll start with one chart first. We all know MicroStrategy's rolled over. These are just 200-day moving averages. MicroStrategy's rolled over. That's just started to kick in. The VIX 200-day moving average is running 19.5, and right now it's 20, so it's popped. It's almost 21. It's popped above. That's a bull flag. The thing is, Bitcoin's 200 days probably going to roll over the next. I just want to show it. And then one thing that really scares me is this crocodile jaw pattern. There's just Bitcoin's breaking down below 100,000 at the same time the VIX is recovering. I mean, it's the exact same trade. Everything's the same trade now. The key thing I want to point out is gold's hanging above 1,000, but the bottom line is this is the VIX. Now that measures implied volatility. Actual volatility is still absolutely buried. This is, what am I using, 90-day here? Still the lowest in like 5 years. So I'll just show a few more charts when I think what's happening. So now if you look on the year, Bitcoin's near almost unchanged. It's probably going to get back to unchanged. The thing is, it's all the same trade. I can't have a view on copper anymore without a view on the stock market, which means I have to have a view on Bitcoin. It's because they're all linked. Copper's starting to roll over. S&P 500's rolling over. And this is the key theme I've been watching for quite a while, the Bitcoin to gold pattern. Now, we've watched this for a while. You knew I was kind of offsides for a while, but it's finally broken below key 25 support. Now it's at 24. This was the low from earlier in the year. It was kind of the key lock in place right before the election. But the bottom line, again, is this is our model. Our model says it should go to about 15. Now, this is my colleague here. But also, I overlaid it with stock market volatility. It's so low. I look at it like, yeah, I expect that breakdown to continue. And then I look at the Bitcoin chart. This is just a monthly chart. What stops it from just going back to its 48-month moving average? That's 55,000. The key thing that's different now is this is 48-month moving average. When people tell me a 4-year cycle's over, then I want to lean back towards it not being over. It's the highest, almost the highest ever. And it was negative before 2020. So key thing that also absolutely scares me is just take gold versus its 40, 50, or 60-month moving average. And here you go back to right the beginning of 2008. Remember it well. It was way long gold and short. Actually, was short stocks as I was buying in the money puts and selling out of the money puts on most of the indices. And gold from here, this same level, corrected 30%. But what's different? It's never happened in history. We've never had gold move at such a high velocity. This is basically about 3 standard deviations above that 60-month mean with volatility this low. Here, volatility is buried. And look what happened the last time it did this. Volatility reached that level of 60 about a month later. I'm sorry, it was a year later. So I'm absolutely frightened. I stick with that quote I said a few months ago. Sometimes it's time to just get out of everything.
Yeah, and it certainly does seem like the markets are now at a point where they've definitely turned down a few headlines that I've been really harping on over the last week that have kind of shocked me. So we know the AI stocks have a valuation based on, basically where people expect them to make money in like 5 years. But a couple things that shocked me. Number one, Micron halted a data center build out. Microsoft's halted 2. And the answer or the reason they've given, they don't have any power. They're like, well, where are we getting this power? These nuclear reactors that are being built 5 to 7 years out. And so all of a sudden you have this narrative that could signal maybe people don't want to buy chips right now. Maybe these companies can't buy as many as people thought because they just can't even launch the data centers that would house them. And then the other thing that's concerned me, and we've talked about this in the past, is that, OpenAI gives this company $1 billion and they give them $1 billion back in some other form, in the form of chips or whatever, right? It's like a back and forth, this circle kind of rotation. And then really the last thing that I thought, and this is something that Michael Burry just said yesterday in a tweet, I'm sure you guys heard about it, but he basically was saying that these hyperscalers are using a depreciation on these chips of 7 years, when in actuality, a 2-year-old chip is only worth about 10% because technology is moving so fast. Yeah. They're almost worthless after 2 years. And so they're understating or they're overstating their profits by a massive margin because the depreciation is being spread over 7 years. And so all of a sudden, the narrative, which we know has driven this market for for last 2 years, let's say, is now beginning to crumble a little bit. And we see NVIDIA today is getting hammered. I mean, what a drop on NVIDIA today. Again, are you, Mike, you're in Bloomberg, right? I mean, is this something that your guys are talking about, some of these changes in these ideas of the AI trade?
Yes, there was a story about it today, but I think you informed me more. It's just one of those things I fully expect is when you get this stretched, markets will just wait for an excuse to revert. And I think we're just getting that. There's so many reasons now, and you're pointing out all the reasons. I sometimes just shut off that part of my brain and look at it and like, right. Yeah, you don't want to buy gold here. And just, I was way too early and not wanting to buy Bitcoin, but it's starting to revert. And now all I see is treasuries, and yields are even up today. That's not good.
Yep. No, and I'm in agreement there. And I think that's something that I always tell people is like, I can look at a chart and tell you generally where it's going to hit resistance and reverse, and then magically the narrative changes so that the chart actually does that, right?
Yeah.
It's almost like the news weirdly follows what the chart is telling you. And these things were like at ridiculous levels. And I think one of the charts that like I want to show here is a great example of a shift in narrative, which is this chart of Oracle, right? So Oracle comes out and announces like, oh, we have a $650 billion backlog. Our earnings were so great. The stock goes up 45%, the biggest move ever on a company of this magnitude, of this size. It was like a $650 billion company. It almost hit $1 trillion the day of earnings. And since then, it's done nothing but go down. And look at where it is today. It's even below where they announced those earnings. And so, this just shows you that investors can be fickle. They'll buy in, they'll FOMO in, but once it flips, it can go very bad very quick. And we see this in crypto, right, Scott? Things can change on a dime in crypto.
Yeah. Can you pull up my screen really quick?
Yep.
I just wanted to go back to the point that I was making.
You got to share it though.
Sorry, I thought it was there and it's not there, but I just want to show you this. Just CoinMarketCap now has historical snapshots of price. You could do this on the Wayback Machine just to kind of echo my points from before. This is the first week of January 2025. The price is, Ethereum is lower. Solana's way lower. BNB, I don't even know, probably in the same ballpark. Bitcoin basically flat to that. Within, with literally Bitcoin is $50 higher than it was the first week of this year. So it's very hard. We have these debates over whether the 4-year cycle is intact, whether it's correlated. I don't know, Mike. I know you always say like this is correlated to tech, this is not correlated, man. This is a flat market for a year while everything else went nuts. For better or for worse.
That's the problem I have, but that's it. And I'm glad you brought that out because let's rope this all in. Like, first of all, when you pointed at Oracle chart, my first thought when I see that is like, okay, we completely cleanse that market of shorts. And one best way to make a market to go up is to have a decent short base. But what you just point out, Scott, I think is now you had to add to the psychology. First of all, what happened with the election of President Trump and all the hubris about all these pie in the sky things to make the market go higher, massive pile into ETFs, pile in, and then the kicking in of poor performance. Now we're towards the end of the year, and the Bitcoin Bloomberg Galaxy Crypto Index was up about 1/3 on the year. Now it's down almost 10%. That means there's more stops. We're just starting to hit stops, and that's my point: is what's the next big trade? And to me, this is the end of the last big trade. It's the beginning of the end, just getting started. And part of the reason I point that is because volatility is still so low, and most people are so complacent. That's when I have to put on my iterations what to expect from the future. Yeah, we got the decent, first move down below 100,000 in Bitcoin. You were supposed to at least bounce to 110. We got to like 107. Now, to me, this is the big old rollover. But it's the time of year now that, you want that G.I. Joe, the Kung Fu grip. You want any money left for Christmas? You're hitting bids.
That's right. Yeah. And what's interesting here is I almost think like the question will be in December, right? And hedge funds generally are like trying to play catch up. So I think there's like this window for this sell off that maybe we float up into Christmas with that kind of end of quarter or end of year window dressing. But then again, it sets you up for, yesterday we had more Fed officials speaking very hawkishly. I remember the last time we had Market Mavericks a few weeks ago, I think it was just after the last Fed rate cut, and the odds of a December one, even though Powell was pretty hawkish, it was still like 85% chance.
Yeah,
but now it's 50-50.
It was 88. Yeah.
Yeah, 88, right? Now it's 50-50. And so the Fed has really come out here strongly against rate cuts, all while people are feeling the economy is slowly slipping further and further into the negative.
So let me go with a hypothetical for you on that. I show that on my screen, that 50-50. Thanks for pointing that out. The hypothetical, I think, and Scott, you've mentioned this, we've all talked about this. Now let's look at the hypothetical of what just happened is we have the most expensive stock market in history by many measures, versus the rest of the world, versus GDP and everything. Now it is the economy now. And maybe Trump will figure out if he could just get through that 10 to 20% correction that stays down for a while and then starts recovering before the elections, that Fed, it can get let's say if we drop 15% and stay down, we'd still be up on the year. Okay. Fed will be easing in a heartbeat.
Not on Bitcoin.
Well, exactly. Okay, so that's a problem. But the Fed will be easing in a heartbeat. Check mark. Trump will be able to get that. Energy prices will probably continue to collapse. So its average price of a gallon of gas right now is like about $3. I think it'll go to $2. It almost always goes there. It just takes a little weak stock market to do it. Bond yields will probably go from right now, the mortgage rate is just around 6, will probably drop to 5 and change. And we'll reset some of these excesses. That's the problem, though. We had the sharpest recovery from a correction in Q1 ever, based on a lot of the data I've heard from people like Gina Martin Adams I used to work with. And now it's like, okay, what's the next big trade? I'm like, if this continues downward into the midterms, it's toast. But if we still got a whole year ahead. If you can look ahead, but that's the key things. We need some cleansing, and it starts with cryptos. And I still have a problem with all these cryptos that are just silly. That needs to be, knock off a zero, reset a little bit, and maybe this is just the beginning of that. But it's sure showing signs of that.
Do you, Mike, you had mentioned earlier there was a bond auction today. Can you fill us in? Was it good? Was it bad?
Yeah, it was not so good. I was just reading about a 30-year, and it didn't go so well. There's a bit of a tail, and bond yields popped up. So right now, the 10-year note rate's at 4.11. It was just at 4.08 before. So this is an environment where bond yields are supposed to go down. I fully expect in just another couple of days like this, and bond yields will go down a lot because it's deflation. But the first move today is not good. It was just another sign. When I saw that it didn't go well, it meant hit bids and everything. So when yields spike, that's bad for everything.
Right. Especially when you're hoping and praying the Fed can cut rates versus now they're going up, right? I mean, that's the negative of it. So turning back, I want to just touch on crypto, right? So let me show my chart here. I have a chart on Bitcoin real quick. And in this chart, we've just seen, basically this is the intraday. So we're at the lows of the day on Bitcoin. But, this is one of the trend lines that I'm really focused in on, because this one goes back to 2023, which kind of, you can see this was your bear market. And then this is really where crypto started to take off. You had the big move consolidation, big move pullback, and big move. And this looks like where it's headed right back to around 94,000. But for those of you out there, like, this is going to be, to me, this is, we talk about trend lines, right? A trend line is called a trend because it's cushioning here the lows of the trend where it keeps bouncing. And so for me as a technician, I'm really watching this 94,000. If it breaks, that to me, honestly, I could see 75 in the horizon. And again, that might sound crazy, but at the same time,
I don't think that sounds crazy.
I'll make a prediction. We'll see that tomorrow, because 74 is also the lines, the stars line. It's unchanged in the year. It's just like
you just say we'll see this tomorrow?
Yeah, I think we'll see it tomorrow.
70. Oh, wow.
94. No, not 74. 94.
Oh, gosh. All right. 94. 94. All right. I was going to say, if you're right on that,
we might see by the end of this stream the way things are going. Yeah.
And even 100,000, especially if you're a bear like me, you're supposed to. I think of a trade. You're supposed to at least test it and then stop yourself out and when it goes back down. But first move to 94. Yeah, there should be buyers there. You should test it as a trader. But I don't trade anymore, so I just kind of watch other people do it.
No, but I agree on the 94 testing tomorrow. I thought you were saying 75. I'm like, wow.
No.
I'm not 24 hours.
God help us. That's the way I look at what's happening in gold right now. The things I'm seeing from gold going up this much. I mean, it's the highest ever versus copper. It's the highest almost ever versus with crude oil going down and gold going up. This is never happened. It's scary stuff. And then it's just making me think, okay, we're gonna get a little mean reversion. Like that chart you started off with, which is definitely important for you to do. That showed the S&P 500. If you can get back to that, is the bottom of that? It's hard for me to see. Is that bottom of that trend line coming in right around the 5,000 handle? Because just going back to the 200-day moving average, which MicroStrategy told us everything's going to go do that, is 6,100. That's just normal, but it's the time of year. Then think of how it carries over until next year. Yes, you're going to get bounces, but this is to me why it's part of the end game that some of us have been talking about for too long.
Yeah, and look at MicroStrategies, guys. There was this key breakdown, and I think that you actually highlighted this, Mike, a while back. Is this daily breakdown, right? You have this trend here, just like what we were looking on Bitcoin, right? This one goes back to September of 2024, but low pivot, and then it breaks, and then look at the waterfall down. And this to me is where, for me at least as a trader, and again, please understand this is not long-term investing. For me, I'm a trader, shorter term, but I'm really eyeing this 180 to 185 zone where we had this former support here as a viable opportunity for just a swing trade. But I mean, holy cow, what a rollover on MicroStrategy.
Yeah, I would say, can you bring up mine real quick?
Yep.
Because I know, Mike, we've talked about this a lot as well on the MicroStrategy chart. And listen, I'm a big Sailor fan.
Me too.
But the chart's the chart,
Yeah.
right? And so this was the weekly 50. We talked about this back in September, that once that broke, was retested as resistance. The weekly 50 is a big deal, right? And you can look at that weekly 50 on Bitcoin, right? We haven't lost it in the entire way, all the way up from 17,000.
It looks like it's breaking
it right now, right? Maybe. So we got to see the weekly close. We usually get wicks below and a close above. But MicroStrategy, I mean, it hit it. It has been nothing but down from there. The 200. Generally, when you lose a 50, every single time in Bitcoin history, you test a 200. By the way, the Bitcoin 200 is at 55. I don't think we're going to 55. I'm just telling you, those are the implications. It could rise. A lot of things can happen. And it may close above, which is what I'm looking for. But that rolled over. And then you look at the daily, it's the same story. And Mike, we talked about this a bunch on here and on Macro Monday.
Yeah.
You know, it lost the 50, it lost the 200, tested both as resistance and nothing but down. So that's what charts can look like when you start to lose if you're a moving average guy. But then, you know, you expect some nice big bounces to mean revert back to those levels, right? And then you see what happens. But if you believe MicroStrategy was leading, then Mike has been very on point about what that could possibly mean for Bitcoin and the rest of the market.
Well, that's one of those anecdotal things you get one time. And I fully hope to be able to write a book about this period. I hope to be mostly right, but get a lot of wrong. But it's anecdotal. It's like one thing that's never happened to me in my entire career, almost 4 decades, is I think I mentioned I had 2 fathers last year asked me to convince their sons to sell MicroStrategy. I was like, oh my gosh, what a bell curve. I mean, there's a bell ringing there.
Were you successful?
No. Well, that's the key. I had a good friend who made almost $500,000 in AOL 20 years ago, and I structured a position for him to get out. He wouldn't do it, and he stopped out when he gave back about half of that.
Oh man, wild stuff. Yeah. So I mean, I think ultimately, and you know, one thing I have noticed, Scott, and you kind of reiterated this, is like the sentiment, at least on X and stuff, is so bearish on crypto right now. It's people are really not happy. Like they're almost angry that it hasn't performed with the stock market. It's very interesting. Well, yeah, you see I have the fear and greed there.
Yeah, 15.
15.
Yesterday, 24. So it's getting ugly. This is, you know, bounce type numbers, but hey, markets can stay irrational or certainly can keep dropping longer than you can stay solvent. But that is pretty, that echoes what you're saying though. I mean, there's the proof, right? It's bad.
It's the thing that it scares me the most. I showed that chart on gold. When you see the world's safest store of value, the most stretch versus almost any mean, 60-month mean in 45 years, you got to go back to 1980. It's telling you something. And that's where this stuff right now we're seeing on the screen is just, this is minor stuff. I mean, this is nothing. I'm talking, you know, big, you know, a third correction in the S&P 500, 1/3. This is what usually happens, is it used to happen, and it stays down. But, you know, this is just getting started. Those are longer term things right now. And I'm afraid about the gradually then suddenly factor. But what happened to gold this year so far is just frightening.
What I think is interesting too is, you know, I was looking at the fear and greed index for stocks, and it's really low, yet we're so close to all-time highs. And
within 1% of the all-time high, it was extreme fear.
And fear and greed was like under 20 on the stock market, which to me is like, I'm trying to figure this out, right? I mean, why? Now, listen, last week we did get Michigan sentiment, and it was the second worst reading on record. So, like, I think people are just really, I don't know if it's the economy or if it's the combination of the government shutdown or it's inflation, people just getting, you know, ground down because prices just keep going up. But people are just really pessimistic.
Yeah.
Crazy. Wow. All right. What else do we want to talk about here? So do you want to say anything on ETH or any altcoins? Is there anything to say, Scott?
Bear market? Like definitively a bear market? I can only show, I mean, you know, how do we define bear market these days? Over 20% down for a sustained period of time with negative sentiment?
I mean, in crypto,
listen,
I think
I deeply actually, I think all of these are buys. I have algos running. I'm buying Bitcoin, ETH, Solana. I would love for them to go down another 10, 20, 50% because I'm not looking to sell it anytime soon. Peter Brandt actually said that to me once. And of course, Warren Buffett said it many times. Warren Buffett, I don't know the exact quote, but if you buy a stock and you're not ready for it to go down 50%, don't buy the stock.
Good point.
And Peter Brandt told me that he told his kids, you know, buy a good company and hope it goes down 50% so you can buy more of that good company. Yeah. So I have no problem with these big drawdowns. I have no reason or intention of selling anytime soon. I would personally be salivating to buy Bitcoin at 74, 88, 96 But I don't usually get what I want from Bitcoin.
Just out of curiosity, has MicroStrategies been buying in the last week or two, or have they stopped now for a little bit?
He bought again on Monday. I mean, his buys are much smaller. We're not seeing the multi-billion-dollar buys like we used to. But it's still 100 million here, 200 million there. It's not a drop in the bucket. I will tell you that all the other digital asset treasury companies have gone very quiet.
Yeah, I've noticed that too, and I think that's part of the void of why Bitcoin's probably been struggling from going up with the stock market. It seems like institutional buying has kind of stalled out here a little bit.
Yeah, you know what you need to get institutional buying going? For them all not to be broke.
There you go.
Yeah, they don't have any money. That's the problem. I mean, I remember some of these, Solana treasury companies were plowing in at 220, 230 with the full boat of all the money that they had. Now you're down. It's a month, 2 months. You're way down. And if you don't have a way to raise capital because everybody's bearish on it, you're just sitting on a massively underwater bag and waiting. Right. And the whole idea was that they're supposed to be able to actively participate. So that's why I think you still have to like Bitmine, Tom Lee and Michael Saylor. The two of them have managed their treasuries or have, been able to do enough financial engineering to be able to buy dips. Most of these digital asset treasury companies bought the top and didn't leave any money to buy dips.
They didn't properly allocate, to buy pullbacks. Yeah, you're right.
Or they just thought they'd be able to raise more capital, or they would be able to sell some stock, and then the stock's never even registered. It's a train wreck.
Do you guys? So turning our attention, we only have a few minutes left here. But I guess my big question, turning to gold and silver, Mike, is silver today double topped at its all-time highs. Yeah. It's pulled back a little bit. Are you bearish on silver here? You think it's going to have a big pullback, a small pullback? What's your outlook like, let's say 6 months out? What are you thinking?
I'm bullish on the gold silver ratio, meaning I fully expect, and I'm not showing that chart right now. I can pull it up later. It's dropped around 70. It'll just take me a second to bring it up. I'd rather just finish off. It's dropped around 79. Its key support has been great support for a while. And it's just when you get volatility this low, which might be a key thing to point out, the gold silver ratio is almost the same chart as the VIX. It goes up. And that's because, so the problem I have with silver is, again, volatility is too low. It's completely dependent on the stock market going up like copper. And even gold can go down now when the stock market goes down, just like we did in 2008. And but it'll just go down less than all the other precious metals. So from these levels, I'm much more bullish the gold silver ratio than I am gold. So. But here's why my impression is they can both go down, but gold obviously always go down a lot less than any of the industrial metals, precious and platinum and palladium.
Do you think, Mike? So you've been bearish on the markets. You said sell everything a couple of weeks ago. Is this the beginning of the big one? Like the big top is being put? Like, are we putting in a cycle top? Are we putting in a generational top? Like what are your thoughts on that?
Yep, I think all the above.
Wow.
I've been pointing. Let's put it this way: you look at stock market cap to GDP, obviously a high in 100
really
years.
Sell everything.
I mean, well, that's the key thing to it. If I'm right, this is way early. And also you always get big bounces, and you have to have denial the whole way. And even in 1929, we had almost a 50% correction to the peak in 1930. You always get that, but maybe it's going to be different. It's got to be difficult. The point is, we are so overdue just for a little bit of wealth reversion, and it's what always happens. And the signals I'm getting in commodities are just, this is time. And then you rope in what's missed the election, Mr. Trump, and what's happened, what he's doing to the rest of the world, the tariffs, all that, and the shutdown. I mean, it's all lining up, and then just the center of the universe, of the tip of the iceberg is cryptocurrencies, and the peak of that is MicroStrategy, and it started rolling over, I think, in September.
Yeah, and I would just point out too, what I'm finding fascinating is that you're starting to see Trump crack a little bit on the tariff side of things. I've noticed that he's talking about maybe reducing the tariffs on coffee and stuff, because he's come out and said, oh, the inflation's doing great. It's like you can buy your same turkey dinner for Thanksgiving, but we look at the fine print, it's like, oh wait, there's like 10 items missing in that thing. But the point being, again, is that it does seem like he's starting to be aware that the average person is really struggling and continuing to struggle, regardless of what he thinks the tariffs are doing. And again, I'm not saying the tariffs are adding to inflation significantly, but I think he's looking for ways to bring down prices like he promised to do.
I showed him my solution. Just let the stock market drop 20%, let cryptos, all that stuff, give up, a little bit.
I will sell everything I have. I will not have a chair to sit in if we get that.
All right. You heard it here first, guys. Wait, Bitcoin goes what, to 50 or 75? Scott will not sit down again.
I don't know, but I'm definitely using my stimmy check to buy it when it happens.
There we go.
Your $2,000 from the tariffs. Oh, I think you probably make a little more money. All of us probably won't get those checks, but what can you do? All right, guys. Thank you so much for joining us. Please follow these gentlemen on their socials below on X, Scott Melker and Mike McGlone. And we will look forward to being, next week, by the way, Andy Scheckman will be joining us on Market Mavericks. We're going to bring in a third. And this way, I was thinking this, by the way, guys, is that if we have another person that's going to join, that if one of us can't make it, then we can still do the show and we can be more consistent.
Do that. Yeah, we need to have rotate, like
someone sitting on the bench ready to step in. All right. Have a great one, guys. Thanks for tuning in. Please leave comments, and we'd love to hear from you guys, and we'll talk to you soon. Take care.